going for fourth quarter for this current quarter. They'll be guiding between 2.3 and 2.4 billion, estimates calling for 2.33 billion. So that's also a slight beat there as well in terms of the range. Adjusted gross margins for the fourth quarter expected to come in between 62 and 63%. That is a slight miss. Estimates calling for 63.2%, so slightly under the expectation there. As far as fourth quarter operating margins, 47 to 48% expected. Estimates calling for 47.3, so in line there. So I'd say mostly in line, forward-looking guidance, but a beat on the top and bottom lines in terms of their estimates. Right now, down about 9.25%, now 10% as I'm looking, as these numbers just coming across the wire. So let's bring KG and Sam back into the conversation. You know, Kevin, as these are just coming across, you know, the street not pleased with what they're seeing. Is this margin number to blame in terms of the guidance?
Yeah, I think so. When you're looking at that gross margin coming in a tad bit light here, I mean, they've had a pretty decent trajectory when you're looking at the fundamentals of this company over the last couple of quarters. They have seen a very strong demand when it comes to artificial intelligence and building out some of these data centers and some of the networking equipment, some of the Ethernet equipment that is used within that. But the margins are getting squeezed here, and we'll see what the actual reason is for that. Is it import costs? Is it something else that's internal within their company that they are starting to see maybe expenses rising a little bit higher than what the street expected here, and you're not seeing the outsized beat and raise type of guidance like we have seen over the last couple of quarters here. So it's pulling back a tad bit. This is kind of the theme of the day, though, Marley. At the end of the day, we have companies that have run up really well. They're trading at very healthy valuations or maybe extreme valuations, and now these earnings reports are kind of readjusting or kind of resetting the valuations for a lot of these names here. And it seems like the investor community really wants to see margins holding up for a lot of these AI tech stocks here.
Yeah, and Sam, you know, we've had so many conversations about the margin story this quarter and the high leverage involved in these types of businesses. It's not a significant miss. They're projecting 62 to 63%, estimates calling for 63.2. But we've seen just how punishing the street can be, even if you come in line.
Yeah, absolutely. I mean, I heard an interesting quote today that we shouldn't give so much credence to certainly the stock reaction off the back of what we hear from these earnings, because, I mean, stocks have been going down on good news. Stocks have been going down on, raised capex. Stocks have been going down on good guidance. So it really has been a mixed bag, certainly as far as this earnings quarter is concerned. We are seeing Arista Networks actually tracking lower by 13% right now. So perhaps we'll get a little bit more of an update on this conference call. But, obviously with a company that is really behind some of the leading tech companies, it really works very much as far as the networking in the background of names like, think of your Netflix and your Zoom. I mean, it is very much providing that service. I mean, this is really seen as the backbone, but we do know that this is very much seen as a picks and shovels type play in this whole AI boom. But when you have these sort of AI valuation type conversations and concerns in the market, obviously we do continue to see that no one seems to be really immune from that right now. But, it's going to be interesting to see what they're doing as far as stacking up against some of the competitors in this space as well.
And certainly, Kevin, before we jump to Supermicro, their earnings coming out right now. Any final thoughts on Arista before we move over?
Yeah, let's see if this is going to be a trend. We might be at that phase where the picks and shovels, the actual hard assets become a little bit more commoditized. And when that does happen, obviously they lose pricing power. That also squeezes margins as well. I'm not saying that we are there yet, but I have never seen a technology cycle where we do not see a lot of this margin compression that happens once we do see a lot of supply hitting the market. I think that's where we're going. And unfortunately, at some point in time, valuations will come in a little bit lower for those names. And at that point, you will start seeing software names that have higher margins, the 75, 80% margins, starting to outperform and gain a little bit more of a better valuation. And you could say a lot of software names within the AI space are still relatively cheap. Also, if you're looking at the cloud players, are also trading at a cheap valuation compared to the hardware names.
Yeah, and Arista trading down about 12% right now, but I want to jump over to Supermicro. We talked about an options corner as their numbers coming across right now. First quarter adjusted EPS coming in at 35 cents. Estimates calling for 41 cents. There was some disagreement here in terms of the estimates because of some of the figures they'd pre-released and some company acknowledgments they made in September. Adjusted gross margins also coming in at 9.5%. Estimates calling for 9.63. First quarter net sales coming in at 5.02 6.2 billion. Estimates calling for 6.09, so a $1 billion miss there. As they are projecting for second quarter, they're saying second quarter net sales of 10 to 11 billion. That is considerably higher than the 8 billion that they were expected by the street. They're seeing second quarter adjusted EPS in the range of 46 to 54 cents. However, that's a miss from expectations, expecting 62 cents. They are seeing fiscal year net sales of at least $36 billion, previously as calling for 33 billion. So a bit of a mixed report here. Shares tumbling down, we're about down almost 9% on this news, on their missing on the EPS and a nearly $1 billion miss on sales. But KG, a lot of the commentary I saw coming into Supermicro was it was not so much about this quarter's numbers so much as it was looking forward.
Yeah, I mean, this isn't a great report. No. I mean, missing both top, bottom line, looking at their guidance, and they're missing. And it's a company that has not been able to kind of correct some of the murkiness that we have seen over the last year or so when it comes to this name. And this is kind of the reaction that you get. We go back to the commoditization of artificial intelligence and hardware. This is exactly what I'm talking about. You have a company that does not have something that's very special with it. I mean, there's other competitors within this space. You can look at Dell, you can look at IBM, and I'm sure there might be a little bit of a diversification from their customers away from Supermicro because of some of the headaches that they have seen from the legal standpoint and some of these probes within their company. And that might actually have an impact on not only just the current quarter, but their guidance moving forward. A very erratic behavior when you're kind of looking at the demand story for this name here. This one can be a mover. Obviously, we have seen a lot of volatility in this name over the last couple of years or last year or so. And unfortunately, this is just not a great report. I'm not sure how they explain this away. They've done this before where they can kind of rationalize the misses, but I'm not sure how many times that the street's going to say, okay, I'll give you a pass this time. Let's see what you can do next quarter. At some point in time, investors may be looking at other places that just doesn't have as much volatility as well as the executive risk like Supermicro does.
Yeah, and still moving within that range that Alex Coffey mentioned during Options Corner. We're still within that 10% range, down about 8.5%. But Sam, as I'm looking at a breakdown of some of their numbers, it's an earnings decrease of more than 47% year over year. Taking a look at the revenue, their sales decreasing more than 15% from the year ago quarter. As far as what you were hearing from your guests today and talking through expectations for Supermicro, knowing they're coming off a turbulent year where they were almost delisted from the NASDAQ, is there any way they turn this around on the call? Because like Kevin said, it's not a great report.
Yeah, well, as we were talking about, it's not about the earnings, it's about the guidance. But even that is not encouraging, as we've heard from this company. But really, this has really been seen as a company that is very much chasing market share, to KG's point as well. I mean, particularly from the rivals like Dell, HPE, that are all vying for a slice of the pie right now. So I think that's been a really big focus for the street right now. Also, the fact that gross margins and certainly the fact that, profits have been eaten away at has certainly been a big focus also for investors. Just as far as some of the analyst commentary going into this, I had seen that, people were quite encouraged by the fact that this company is really what builds the hardware for the whole AI boom. Once again, it sells the shovels in the gold rush, as one analyst puts it, but it does come at a cost, and we're very much seeing that in these earnings being reflected there. I mean, it does build the machines, as one analyst put it, that really makes the chips that the NVIDIAs of the world actually matter. So, I think this just comes down to a case where, maybe it is a competition story right now for a Supermicro computer and losing some of that market share.
Yeah, and KG, final thoughts before we say goodbye here on Supermicro and some of the numbers we're receiving or what you expect to hear on the call.
Yeah, I would say, we obviously beat up this name. The bright side here, it does appear that their free cash flow, they are utilizing that to pay down some longer-term debt. So there is maybe some financial adjustments that they are making to kind of shore up their balance sheet a little bit if you're looking at the year-over-year comp. So I'll give them credit for that. But at the end of the day, this is a demand story. And Sam is right. They have a lot of competition. And unfortunately, more competition comes with lower prices. Lower prices means you're squeezing margins. How do you provide a little bit more efficiency internally in order to try to preserve those margins? It seems like SMCI is getting a little bit outplayed. I don't even think they're taking market share. They're losing market share at this point in time. They're not really even maintaining it just based on the numbers that we're seeing, unfortunately.
All right, well, Kevin, we appreciate you being with us to break down those earnings from Arista Networks and from Supermicro. As far as Arista is going, trading down about 9.75% right now. Supermicro trading down about 8.75%. And Sam, I'm taking a look at Rivian now. Their numbers also coming across, and of all the ones to surprise us to be in the green post market, it's Rivian. They're posting an EPS miss here. They're posting a loss of 96 cents. Estimates calling for 85 cents, but their sales are a beat. They posted $1.558 billion in sales, beating estimates calling for 1.501. But more surprisingly than that, some big announcements here. They are setting up a new company called Mind Robotics, a new robotics play company here. Also saying they're going to ramp up their R2 model as EV tax credit fades. Very interesting timing for this report from Rivian because Tesla was so in focus today with the miss on those China numbers. Do you think that has any play here as well, that we saw China under pressure today in terms of Tesla's sales? And now we're taking a look at Rivian, and they've got a mixed report, but they did see production of higher numbers than expected. 10,720 vehicles in the quarter. Estimates calling for 10,487. So, slightly better than expected there as well, even with some of those production pull forward numbers that we were already aware of.
I don't think the sales numbers are a particular surprise, particularly because of the fact that we did see that very much do start by the expiration of those tax credits. I mean, that's certainly something we've seen across the board. But I would say that the timing of some of these announcements, particularly around what you're seeing here as far as robotics, is, I suppose, timely in the fact that now that has run up and everybody's wondering what these companies are going to do next, whether there is certainly the demand as far as some of the EVs is concerned, that obviously they need to do something to try to reassure investors right now. And I believe that AMD is also out as well, Marley.
AMD just came across the wire while you were talking. Their third quarter numbers. Let's walk through them. EPS coming in at $1.20. That is beating estimates for $1.17. Revenue for the third quarter coming in at $9.25 billion. That handily beats estimates calling for $8.74 billion. Their CapEx spend number, $258 million. That is well above the $219.7 that the street was expecting. Operating margins coming in at 24%. Estimates calling for 24.8. R&D expenses coming in a little bit higher at $2.14 billion. Estimates calling for 1.96. And their operating income coming in at $2.24 billion. Estimates calling for 2.15. As I'm taking a look at the response here, though, we're down about 7.25%. I want to bring George Tsilis into the conversation here to talk through AMD and these numbers as they're coming across the wire here. Also, just starting to get some of their guidance as well. So I'll give that to you, George, before I ask you about anything. Fourth quarter revenue expected to be between $9.3 and $9.9 billion. Estimates below that range entirely at 9.2. Adjusted gross margins expected to come in at 54.5%. That was exactly the estimate. And those revenue numbers, though, above there, they also are adding, and we talked about this earlier on Next Gen, what they would do about China. They've added a note that their outlook does not include China MI308 shipment revenue. So that revenue number, despite being so strong, could in fact be stronger if they then are able to include the shipments of those MI308 chips. So, George, as we see this, response here to AMD coming out right now, and I want to refresh my charts here as I tell you we're just down about 1/3% here. What are your first thoughts as we're seeing these numbers come across the wire?
Well, I mean, first off, I wouldn't jump the gun on any movement just right now. I think when it comes down to China, which has been an ongoing issue for AMD, I think the conservative aspects of China's sales being burdened because of things like political tensions and tariffs are creating a situation where sales are essentially underrepresented potential. So that could certainly be a positive catalyst for AMD going forward. Both the top line and bottom line EPS estimates or beats certainly make a big difference. But I think it comes down to two is the CapEx numbers were actually lower, as you mentioned, than estimated. So one would suggest what's going on with that number, because we're in a situation where if you're not getting a return on CapEx, I'm going to use Meta as an example, they're going to punish you. But now if you're creating a situation where there's underwhelming amount of CapEx relative to the estimate, there may be some concerns about that. that maybe they're seeing a little bit less visibility and progress for returns on CapEx. So that might be a different situation here for AMD that you have to keep in mind. But it's a little too early to tell. We're starting to see a little pickup here, as you can actually see, moving as we go throughout the call.
And George, I'm not sure if I misspoke or you misheard CapEx numbers. They came in at 258 million, estimates calling for 219.7. So a much higher increase in CapEx than was expected for the third quarter here. They have not released their fourth quarter expectations for CapEx spend, just the revenue margin numbers there. But, Sam, I know you had a lot of conversations about AMD and some of the things that would be in focus here. As you're looking at some of these numbers, what sticks out to you most based on the conversations and the notes that you've read?
Well, I think this was a good quarter, certainly given that a lot of the attention is on 2026. I mean, many have been saying that this company is really a next year story, and that is obviously because of the MI450 chips and also the Helios systems, which will be key for investors. And the reason for that is the street wants to see, how both of those things perform, as well as, trying to position itself against a name like NVIDIA. So I think, as you and I had discussed earlier today, it very much is a little bit too early to see how, some of these partnerships and deals that we're seeing as far as OpenAI are actually going to bear fruit. So I think this is going to be, a future quarter story very much as far as the results that they're seeing from that.
And George, we're getting some of the revenue breakdown numbers. I just want to walk through some of these data center revenues, $4.34 billion. That's up 22% year over year, besting expectations for 4.14. Gaming revenue coming in at 1.3. That's up better than estimates as well for 1.1. Client revenues 2.75, up 46% year over year, better than 2.6 billion. Embedded revenue 857 million. That one was a slight miss and also down year over year, but a much smaller component of the business. Some of these were the revenue numbers that were mostly in focus for AMD. And as you said, we started to see a small reversal here, although we're seesawing back down. We're still up 0.33% here for AMD. But, what are your thoughts on these revenue numbers?
Well, I think that first off, the client revenue is going to be their biggest component, and that includes your data center spend. So that was higher than the estimate. So that's a good sign. I think the embedded revenue is interesting, even though it's a smaller portion of their total revenue base right now. It really constitutes factory automation and automotive revenues that seem to be a little bit lighter than estimated. But I do think that at the end of the day, the embedded segment is the linchpin. In other words, their biggest segment. That's what everyone's expecting for growth going forward. But I haven't seen the guidance, especially when it comes down to some of the bigger deals that AMD has going forward. That's going to be certainly important as we move through this conference call, because that's really what the stock has been trading at, considering the deals that the company has with major hyperscalers.
Yeah, with OpenAI and Oracle, any information about those, I know Sam and I talked about earlier, and it's come up in all of our conversations, that they're not factored into the numbers this quarter, but when they will be is going to be very important here. Advanced Micro Devices now mostly unchanged in response to their earnings report. But thank you, George, for being with us to break down those earnings.